Hey everybody, Chuck from Financial Perspectives here with a short video as this weekend's blog post. Apparently those promoting the end of the world have decided it's time for another massive marketing promotional campaign, as I've gotten numerous emails wondering if it's time to buy precious metals. For those who don't know and don't pay attention, and by the way, good for you, the fear promoters continue to push the story, the dollar is crashing, the Chinese and their currency will soon take over our position in the world. Oh yeah? And the only obvious solution is to buy precious metals to protect yourself. Oh, and lucky for you, we just so happen to have somebody ready for your call at the toll-free number listed at the bottom of your screen. Call now as operators are standing by. All sarcasm aside, it's just this story is old and tired. It never changes because it's all about selling fear. I could tell you some sad stories of some who have been forever damaged from listening to the noise, but that will divert this discussion away from its intent. Ultimately, the promoters may be right, but rather than listening to them, I find it much more profitable to listen to the market. Let's take a look at a couple of charts and see what the market's telling us. The first chart is that of the US dollar and the Chinese yuan currency proxy. The chart split into four sections. In the upper pane is the momentum indicator of the dollar. In the second pane from the top is the US dollar. Now, does this look like a currency that is in free fall or crashing to anyone? Maybe if I turned it upside down it might. But notice how we were in an uptrend in early 2011. We then consolidated from the middle of 2012 through the middle of 2014 and finally broke out strongly higher. As a side note, this is what markets do. They trend, they can then consolidate, and they continue to repeat this process ad nauseum. Looking at where we are today, we got massively overbought, as you can see in the upper pane. Overbought conditions need to be unwound, and that is exactly what is happening right now. We are consolidating. We have formed a pennant pattern, and from the looks of it, it will soon break out. The question is whether it's higher or lower. All indicators to me right now are pointing higher, but I have no bias and wait for the market to tell me, as it can change its mind at any time. In the third pane is a plot of the Chinese yuan. As you can see, it too has been an uptrend, but last week's currency devaluation put a real hurt on its uptrend. But for the moment, let's ignore last week's move by the ruling party. Both the dollar and the yuan had been moving up together since April of last year. From the chart, does it look like their currency is overtaking the dollar? Well, it's hard to tell because in order for you to know for sure, you need to compare the two since they're both rising together. The plot in the bottom pane does just that. It's a ratio of the dollar to the yuan. And as you can see, since 2014, the dollar has risen more than 25% against the yuan. The markets are telling us the dollar is still king, and the yuan, at least right now, is not ready for prime time. Knowing that for now, the dollar is still king, let's take a look at precious metals and see what the market's telling us. Remember, successful investing is about listening to the market and following it rather than forcing our beliefs on it. My next chart is that of gold. You could substitute silver or even the miners if you like. They all look similar. In the upper pane is price momentum, and the lower pane is gold price. I have drawn in blue two important horizontal support resistance levels. The upper one was the price when gold finally broke down from its massive consolidation topping pattern that ended in April of 2013. The second and lower one is the one I want to focus on now, since it's just much closer to where the price is today. In July, we broke out below support, making a new 5-year low. At that low, we were oversold, which can be the trigger for short counter-trend bounces. That is likely what we are experiencing now. We will soon find out as price is approaching that important $1,160 resistance level. If we're able to break through that initial horizontal resistance, you can see it will quickly run up against additional downtrend resistance. Right now, I view this as a short-term trade opportunity for nimble day traders only. I'm not saying this is not the bottom, because it might be, but you only find out tops and bottoms after the fact and in the rearview mirror, not when you're in the middle of them. Regardless, this sector, as all sectors, are on our radar, and when they provide the necessary confirmation, then and only then will I commit client monies, not before. It's all about staking the odds in your favor. For those who are thinking that new lows are great buying opportunities, it's true. You can make a bunch more money if you're right and pick a bottom. But tell me, how did that work for those who were calling the bottom here and oh, maybe here? I can tell you that their accounts are a lot lighter because of it. I have learned from my own personal trading experience that to improve your odds of making money, and that's the goal here, you need much more to confirm, and those conditions do not currently exist. To summarize and wrap this up, the dollar's not crashing yet. The Chinese or the currency are not taking over yet. And precious metals are not a buy yet. This, of course, can change very quickly. So we closely monitor and track the investment world to capitalize when a good risk-reward opportunity arises. That's it. Have a great week, everyone.